Hello, everyone, and welcome back to our weekly market update. Thanks for attending this webinar and to start trading with One Royal. So, our disclaimer, the information provided in this webinar is for educational purposes only. Please do not take them as a financial advice. Do your own research before start trading or investing. So, these are the assets that we will cover today: Euro USD in Forex, Pound, the Yen, and the Aussie. In metals, for sure, we will cover gold, and in oil, UK Brent oil, indices, US 500, and finally, we will analyze BTC USD. Let's start our analysis with Euro USD on the weekly time frame. So this is Euro USD. On the weekly time frame, nothing changed much. So here the market is still in a downward movement. The market tried to move higher, however, it faced a strong resistance. Let me zoom in. So the market tried to reverse here. However, it faced a strong resistance around this level here. You can see we have a low to the left and a high to the right. The market tried to move higher. However, we can see that it posted a candle with a high wick to the upside, long wick to the upside, which signals that the buyers are weak. If we go on the lower time frame, what we can see is that the market, let me remove this, the market tested this area. Let me zoom out, which is this resistance, posted a big bearish bar, which is equal to the previous one. It's not an engulfing bearish pattern, but however, this body is big for a bearish bar. The market continued to the downside. What I expect is furthermore to the downside in the coming days to post or to test this area, which is 98.44. We have something called here as a bearish order block. So the market could find some sellers here, and then the market could test this area here, the 98.43 or 44. Weekly time frame, the market on the weekly time frame for the pound is still moving to the downside. We have a deep correction here. Okay, what we should look at is this long wick here. So the market is moving beyond it. However, this might end up with a fake breakout. Why? Because this is the first high that was broken. So it's not confirmed the reversal here yet. If I need to confirm a reversal, at least this high should be broken, this one here. For now, this is not a relevant high, which is this one. This might end up with a fake breakout after moving to the downside. So on the lower time frame, what I see is we have a bearish engulfing pattern. You can see that the bearish bar engulfed the previous bullish one. The market is about to move lower again. This is most probably a fake breakout, this area here, this zone, and then we could see a move all the way down until the 27.68, this area here, the previous low. USD JPY. USD JPY is obvious. We are still in an upward movement. On the higher time frame, nothing changed. On the daily time frame, we can see that the price tried to break this bullish trend line. You can see the market moved below it, left a fake breakout, and moved to the upside. It's obvious. So here we have a common pattern, which is these three bars, the bearish, the doji, and the bullish one. The market is posting a reversal here to the upside. What I can see is maybe a move a little bit lower than the 47.79, which is this level here. So the market now is about to move maybe a little bit lower than this level, and then a move higher all the way up until 151.93, the previous high, which is this one. Okay, so the market posted a fake breakout to the downside. You can see we have this common pattern here, maybe a little move to the downside, and then a move all the way up until the 151.93 to continue this movement to the upside or the uptrend. On the weekly time frame for the Aussie dollar, the market is in a downward movement, lower highs, lower lows, deep correction, similar to any major bear. We have a deep correction. This is caused by a weak dollar last week, but last 2 weeks, 1, 2. Now I expect that the market could regain power again, the dollar, and push the Aussie, Euro, and the pound to the downside, since the dollar is strong, and we are expecting a rise in interest rate from the Federal Reserve. So US dollar most probably will find strength, and this will lead to a weak Australian dollar here. So on the lower time frame, the market broke this bullish channel to the downside. You can see what it's doing is testing this resistance here, which is 64.33. So we have a breakout to the downside, testing this area here, and then what I see is a move to the downside to test the 63.10, which is this one here. So we are bearish on Euro USD. USD CAD on the higher time frame is still bullish for sure. We have higher highs, higher lows. This is a kind of a channel here, or parallel one, range, whatever you call it. This one and this one. The market is bouncing inside this range. This is more clear on the daily time frame, you can see. So what we expect may be a move to the downside until the lower end of this channel, which is the 35.06. We could see this move to the downside, and then a move to the 34 or 38.41 to the higher end of this channel. So the market is ranging inside this. It might go below this low to grab some liquidity, and then the market move higher to test the higher end of this range, which is 38.41. And also this is caused by the uptrend on the weekly time frame. So once you see a range of inside an uptrend, most probably the market will continue its main direction in the same direction of the main trend. Okay, so we are in uptrend. The market could test the lower end and then go up again to continue the direction of the main trend. XAUD USD, or the gold. The gold on the lower time frame, sorry, on the higher time frame, which is the weekly one, bearish for sure, nothing to be explained, nothing changed much. We have a bearish engulfing pattern here. Okay, bearish engulfing pattern. You can see it, and then the market tested this area here, and then move to the downside. So let me go to the lower time frame to make things clear. But remember here that the market tried to reverse higher, posted a bearish engulfing pattern, then we are continuing in the same direction of the main trend. This correction is not a reversal. If this was broken, then there was a chance to see the gold running to the upside. But this is a high that wasn't broken. We have a bearish engulfing pattern, which led to a move to the downside. On the daily time frame, okay, on the daily time frame, let me make these things more clear like this. Okay, so the market moved to the downside. This is a bearish impulsive wave correction in a form of a pennant. Then the market found some sellers here around the 50% level, Fibonacci retracement level. We used this high and this low here. So the market retraced as a correction inside this pattern to the 50% Fibonacci retracement, where the market moved to the downside. What we expect furthermore is a move to this level here, which is 1620. So we are expecting maybe a higher correction and then a move to the downside to the 1620 mark. So now maybe the market is grabbing some liquidity above this high of this candle, and then the market will continue its move all the way down until 6020. Brent UK oil, the market here is moving to the upside on the weekly time frame. We have a breakout of this bearish trend line. Here, a bullish engulfing pattern is inside bar, another bullish engulfing pattern. The market is sitting around the 92.08, which is here, and most probably we are going to see a move higher until the 97.75. So let me repeat: a breakout of this bearish trend line, bullish pattern, inside pattern, another bullish engulfing pattern here. This is the bullish body here. So this is bigger than the previous one. So the buyers are in control of the market since we have a bigger body comparing to the previous one. And the market is sitting around the 92.08, which is this level here, and most probably will continue its move until the 97.75 mark, this one. What else? US 500. US 500 made a big correction. So here we have an impulsive wave, a correction for the last 2 weeks, which is good to the US equities. The market moved to the upside. However, we have here a strong resistance that coincides with the 61.8. On Wednesday, we have the Fed Reserve statement about the interest rate. So they will announce whether they will rise or lower interest rate, but most analysts are expecting that the interest rate will be raised. So if the dollar or the interest rate was raised, then the dollar will be strong and then the US equities will tumble. So if this scenario occurs, this will lead to a weak US equities or US stocks. So the market most probably will start to tumble on Wednesday around this level all the way down until this 3,578. So let me repeat my analysis here. On Wednesday, we have the Federal Reserve statement about the interest rate, announcement about the interest rate, whether they will raise it or lower it. Since most of the analysts are expecting the market, the interest rate will be raised, so the US dollar will move to the upside and the US equities will tumble. Okay, so there is a negative correlation between the US equities and the US dollar. So most probably the market will move to the downside around this level here, which is 3,578. Finally, BTC USD. BTC USD on the weekly time frame. Let me zoom in. The market is still in a downward movement. There are a lot of, okay, let me remove this so you can see the chart. So the market is still ranging between those level here, which is 20,500 and the 18,150. Okay, you can see the market is inside this range on the previous data showing that the market is in a downward, but then entered into this sideways movement. On the lower time frame, which is the daily time frame, let me plot those levels. We were talking about the 20K and the 18K. This is the 20K. This is the 18K. The market succeeded to break this 20K level, the higher end of this range. So what I expect, most probably we could see a move to the upside to this level here, to the previous high. We have an accumulation here, so the market could rally again to the upside after breaking this triangle, if you would like, or wedge. So the most probably the market will break this wedge to the upside and continue its move all the way up until this level here, which is 22,400. And also we can see that we have an ABCD pattern. So this is the ABC bullish impulsive wave. And if we assume that should be like the CD, which is the next bullish impulsive wave, equal to the previous one, so most probably this will coincide with the previous high, which is 22,400 mark. So this is our analysis for today. Thanks for watching. Hope it is beneficial. Have a lovely day and see you next Tuesday, same time.